Yeah, so about 10 days ago, week ago Friday, we upgraded tech from underweight to market weight, just thinking that the bulk of the painful part of the tech trade was probably behind us. It was all based on looking at prior downturns, prior tech corrections, and this one really got pretty extreme other than ones we could name, right? COVID or financial crisis, European crisis. So we thought the risk reward was probably worth it. Our guess was maybe we were 80% of the way through it. So our thought was there's some opportunities to buy some things and get closer to market weight. I do think for the market to really work, tech will have to participate and do well. I do think that's right.
You still like biotech? Because that sector is still taking a drubbing.
Yeah, I like biotech a lot. We always pair things to try to beat the market. So if we're overweight biotech, we're going to be underweight, say, like profitless software. To me, biotech's a real opportunity. Relative price to sales is at a 10-year low. And the innovation pipeline looks the same. In other words, the forecasted sales is the same as it was prior. One of the things that's really interesting, Melissa, is people feel like when interest rates rise, all these businesses that have a lot of value far out in the future will do poorly. But did you know that only 15% of biotech companies ever generate positive cumulative free cash flow? And the ones that do, it's 5 years from now, 5 years to do it on average. So the whole terminal value argument will be on the next interest rate cycle by the time that matters for most of them. So our judgment is probably pretty good risk reward there. Sure, if we get dovish sentiment relative to today, they're all going to go up, profitless software and biotech. But I think the innovation's pretty cheap for biotech, and I like that idea.
It's Sarah. Just to dive into the tech call, Adam, old tech versus new tech. How are you distinguishing old tech? Is it based on valuations or just how long they've been in business?
Actually, there's a correlation between those two, Sarah. That's a good question. I tend to look at, as this growth value thing as a factual thing or a systematic thing, right? We have a model, we assign, a level, and the top third of growth in the middle or neither, and the bottom are value. So it's pretty clear when you look at things like dividend and growth rates and valuation, how to parse them out. Personally, I like old tech. I like a name like Dell. Exits are low, seems to act fairly well on a relative basis. When the NASDAQ really gets clobbered, it hangs a little better. Maybe they can earn $8, $9, $10 if you look out 2-3 years. So I think it's pretty cheap, and I like the fact that Dell owns a lot and you've got them on his side. So I think there's some old techie stuff like that may do better than people think. There'll probably be a slightly better PC market than people think as well. So I think Dell's a good old tech idea.
Really quick, Adam, last year you went really, really negative on Peloton. It's up a lot today. I'm wondering if you would say it's a short at this point. You short these gains.
Well, Melissa, I'm glad you mentioned that. In our year-ahead outlook, we pitched a lot of these names beginning last year as short ideas. We call them kind of low-quality work-from-home names. Fortunately, we pitched it short before the earnings when the stock imploded on earnings. And even with this deal speculation, it's back up to about where it was before earnings. Generally, though, what I'd say is I don't really mess with deal stocks. So once you get a name that's got speculation, my view is you get out of the way because only the true experts should really understand that art. I like the idea of being negative on names that, are lower quality, meaning they don't have, good stable revenues and cash flows, and that have a high correlation to our work from home basket. That means that as the world continues to reopen, they'll do well. And I think you saw in today's tape, you guys were talking about a little all this weird rotation with kind of cyclicals. Well, look what led. What led was American Airlines and Carnival and the cruises, right? So that's a bit of a reopening tinge. I think that makes more sense broadly than owning these work-from-home names.
Wise words. I don't mess with deal stocks.
Yeah, once it's in play, how are you going to make money off that?
Exactly. Yeah.
I don't. Yeah.
Adam, thanks. Adam Parker, Trivariate.